Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 15th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We've seen a steady continuation to the upside. Obviously, we've had periods here where we've had some very quiet price activity on the whole. We've had a couple of bursts of movement, but this one has carried on now for several days, 5-6 days now. Straight up. And what I mentioned before was that we could begin to see price form some sort of high, pull back, and begin to trade sideways for a couple of days here. And yesterday we did start to trade very quietly. Eventually we got an upside break, and then the trend day continued from there. In overnight trading, we've seen a high here of 23.40, and that's just beyond our 50% monthly expansion target. Our next key expansion target above here is 23.44 half, so that's the next major key level above. But for the most part, we've already seen such a big move up that any pullback is going to be likely to be defended, or any hold at highs will likely have a very strong area of support as this thing continues to work its way higher. So we could be looking at much more upside trending behavior toward 23.44 half and also the 23.59 half. So those are the 75 and 100% expansion targets for the month of February. Now, if we take a look here at the intraday time frame, you'll notice that in the previous session we had a very modest range for the most part. We were looking to fade the edges of the range, but what we were looking to do also was defend 23.20 for a shot at 23.30. And I mentioned to our group there's a good 10-handle move right there coming. But once it was able to establish acceptance beyond 23.30, this thing continued onward for a very solid continuation into the 23.37. So that's a big time push up there. Now that we've seen another push, we may see a continuation of that sideways to up theme. So again, it could be a fade the edges. You also see right here there's a major LVN at 23.30. So any push into this LVN could be another opportunity to bring it back toward 23.40. All right, let's take a look here at crude oil. Right now, crude oil trading in a quiet range. We have the EIA report later on this morning, 9:30 a.m. Central. If you're taking a look here at the daily chart, you'll see again we have a very narrow range that continues to build out. And this range is very reminiscent of one we saw way back before we kind of sold off here, which is right here. Very similar range to what we have going on right now. It's packing a lot of energy, and look at how this thing finally got going. It got a downside break. We got a big push back into about 38s, and that's after a break there of 55.60. So this has a lot of energy built up, and this one doing much the same here, building a lot of energy. When we get that move, it could have a quick push back toward 39s for a retest in this area and back up. If it can break through 55s, we could be looking at quite a push back to the opposite end of this range, at least 62s. So there's a lot of energy being built up in this. Unfortunately, we're not seeing any real movement just yet. We continue to see this thing just defend and reject off of 54s. And right now we're just holding above the previous month's close. Failure to hold that zone right there opens up a retest of lows back into 51 to 51.20. All right, let's take a look at the intraday time frame. On the intraday basis here, you'll notice that crude oil is forming a tight range right here on lows, 52.70 up to 53.10. Basically, it's a fade new highs, fade new lows early on in the day as we head into the EIA report, again, 9:30 a.m. Central. Once that comes out, we could be looking at additional movement here. Overall, we've seen a pretty nice push higher. This is where we had our absorption signature that developed. We had a big time push. We got into 54s. We hit our primary target of 53s and got it extended up to 54. Since that time, we've had a big pullback to 53s, and that's kind of where we chopped above and below it. Remember, 53s is composite VPOC. So right now we do have this LVN here. That's about 52.70. That LVN should be defended for a push back up. Any failure to hold 52.70, 52.60 opens up a continuation back toward 51.67. All right, let's take a look here at, here's DX. DX here has shown a big time continuation higher. For those of you that were part of our February market outlook webinar, one thing we were looking at was for price to reject levels below the previous month's low. So the market rejected those prices below the previous month's low and came back with a rejection day. From there, you can see that bulls came in and defended off the previous month's close, and we've seen a steady up move since. And so that was exactly what we were looking for here to begin the month of February. This was the first trading day of February, so I mentioned if price gets below the low, watch for a trap and look for price to pull back. The first target was going to be 101s here, rather 100 half, then 101s, and then you have the midpoint of the previous month's range, which is about 101.60. So right here, 101.60. 101.60 is the next major target, so we're coming into it. Now, given the strength here, we could see more continuation into 102s, but this is what I offered in terms of guidance for the month of February. As we head into 102, this is about as high as we can go here before bears really want to defend and push this thing back toward 99.5. So we have a couple of distributions here where price is currently trading, and this is the point here where they're going to need to reject to bring it back down toward the bottom of the current distribution, because they've already rejected prices above. Now we could get a little bit of above it and then by the end of the day close back below it, but we'll be looking to see what, if any, rejection occurs there, because that could be the next move. This has been the first move back up. Now the next move could begin from 102 back down to 99.50. So we'll be looking for that trade. As it is right now, we're still trending up. So we take a look at the intraday here. The intraday time frame will show that prices are still in an uptrend. Every time price gets below the previous session's close, that's an area to trap or defend. So far, that still remains the case as this thing continues to trend up. There's a nice LVN right here at about 101.09, 101.10. So any pullback into that zone could still be a great buying opportunity for a continuation toward highs. All right, let's take a look now at ZB. Here's a look at ZB. Here's the higher time frame. One thing with ZB is that, it got a very, very solid flow to the upside, but equally powerful has been the return back down, basically right at the point where this thing lifted off to begin with. Right now we're trading in the lower distribution of the rejection day or potential rejection day, so it doesn't make for a very easy spot here in terms of the previous session's range. If we switch this over here to a weekly, so we look at it and take a look at the week, we're sitting right on the previous week's low price. So we rejected below it, and right now that's where bulls are defending. So the previous week's low is the level to watch here. That level is 150.10. So 150.10 is the level to watch here for defense by the bulls. That could open up a little bit more strength to the upper end of the day, maybe back toward 5-day value, which is 150.10. So right now, any failure to hold this level will continue prices downward. So it's been a very heavy market, not very buoyant here during this downtrend. So if you are defending here, you have to be very, very careful and look to scale early and get to break even quickly, because this thing has continued to trend lower. Any failure to hold there would just open up more weakness to new lows. So if we take a look at the intraday time frame, here it is. Again, you can see the previous week's low is here. Price came below it, formed a little range, broke back above it, and now we're coming back to hold it here. So that's a level 150.10, 150.09. Right in that zone, look to defend it. We have a very narrow range right now. This is the next pivot to get above 150.30. So if they can hold this zone and start to push back up, you could be looking at 150.10, 151.10. Which is 5-day VPOC, along with that 151.11, and you got key levels all the way back up to work. But right now, bulls attempting to keep prices back above the previous week's low, which would open up a push back up previous week's close would be 152 evens. That's about as good as you can get here over the next day as this thing tries to work back up off the previous week's low. All right, that's it for now. Let's see how this plays out heading into the rest of the day. Good luck and trade well.